Hi there guys, welcome to today's video which is going to be discussing the Forex basics. I'm going to take you through the terminology, what everything means and how more importantly you can take action on that from getting started, getting set up, all the way through to taking trades. So as you can see here on my screen, the topics of discussion is to introduce you to some of the basics so you have a better understanding of how we generate profits from the financial markets on a consistent basis. We're also going to show you how to maximize trade alerts while learning to become a profitable trader by grasping the terms and also removing you out of the equation as quickly as possible. So first things first, we need you to remove your emotions. Do not trade more than you can afford to lose. You can lose everything that you put in to the financial markets. You're fully in control of your own money. Anything that we say is not financial advice, and past profits do not guarantee future results. So let's get straight into it. So when we're looking to get you started, the first things that you're going to do is you're going to get set up with a broker. So when you're getting started, this is the things that you're going to need to remember: the standard account, MT4 or MT5, and your base currency, whichever you choose. MetaTrader 4 and MetaTrader 5, there isn't much difference in the app. However, with the style of trading that we use, MetaTrader 5 is a lot easier to use because you can close all positions very, very quickly. But again, this comes down to a personal preference. So again, you can choose which one resonates with you. You can try them out on demo accounts for this example. But as we always know, with what I teach, I don't recommend trading demo. But again, if you want to see the usability, the functions of the account, MetaTrader 4 or MetaTrader 5, it's completely up to you. So then once you do it, you're obviously going to download either of them apps. In this scenario, I'm going to talk you through MetaTrader 4. So if we download MetaTrader 4, you obviously head over to the App Store, download that. If you're on Android, make sure you just use it on Play Store. And then linking MetaTrader 4 to your Vantage account, you're obviously going to open this and you'll have been referred by someone. And then what's going to happen is from our side, you're going to receive an email from Vantage. On there, it's going to share with you the account number, the password, and the server, just as you can see on the right-hand side here. You must use these to log in to your MetaTrader 4. I would highly recommend not copying and pasting this. Make sure if you are going to try and copy and paste, make sure you do it to your notes app on your phone. Don't copy from email over to the app. Just for some reason, it doesn't seem to work. So the first thing that you're going to do is on the bottom right-hand corner where you can see it says settings, you're going to click into here and then you're going to head over to where it says click new account. You can see that right at the top there. It'll give you the option here to create a demo account or log in with an existing account. Always, from my perspective here, I always recommend going straight with a live account because demo gives us false perceptions and it can start the gambling process relatively early on. So this is what it looks like once you click on log into an existing account. You're going to click the bottom option there that says log into an existing account, and then it'll bring you onto your server. You'll have been sent that on your email. You can see here at the bottom, it says MT4 server or MT5 server. All you're going to do is you're going to search for that in there. And then once it comes up, you're going to put in the login and the password that you get sent. Again, remember on this, please do not copy and paste. If you are going to copy and paste, make sure it comes from the notes. The next thing we're going to do is set up your currency pairs. So as you can see here on the bottom left-hand corner, it says quotes. If you're on MetaTrader 5, it might look a little bit different. But again, I'm using MT4 in this example because that's the one that I currently use the most of. But you'll see loads of different currency pairs such as AUD, USD, Euro, AUD, Euro, USD, and so on. For me personally, I only trade gold. I trade some Bitcoin on the weekends, but as a group, we are called the gold trading community in Traders Kingdom, right? So we want to get rid of all of these other currency pairs. So what we're going to do is we're going to make sure, first of all, it's switched to advanced. At the top, you'll be able to see it says simple to advanced. If it's on MetaTrader 5, there's 3 little dashes in the top left-hand corner that you can change it over to. And what we're going to do is we're going to click on the edit button and we're going to delete all of these currency pairs off. So you can see here, the edit button is in the top left-hand corner up here. And then we're going to come over and we're going to delete all of these currency pairs off that we do not trade. This keeps it super simple, clean, and effective for you. Then we're going to click on the top right-hand corner. In this bit here, you're going to search for XAU, USD, and you're going to add that as an option onto your account. There's loads of different other options that you can add in, but like I said, we only trade XAU, USD. So now, obviously in this scenario here, I've not deleted them off, but let's say you're wanting to now understanding the chart, you're wanting to get into it, you're wanting to, learn how to look at the currency pair. When you click on the actual currency pair, you can give the option of trade, chart, or details. Just click on chart, or you can simply, as you can see here on the bottom corner, you can see it says chart, right? There's a couple of options for you to do that. For me personally, I like to just press the currency pair and head over. In the top left-hand corner, you'll see options of M1, M5, M15, M30, H1, H4, D1, and so on. These are just simply meaning 1, 5, 15, 30 minutes, 1 or the 4 hour, 1 day, 1 week, 1 month. What that simply means is that each candle that is seen on here, which is these candles here, represents that time frame. So if this is selected as H1, which it is right now, each of these candles is 1 hour in time. If you change it to 1 day, it becomes a day. So this basically means that each candle that you see is what represents on that time frame. So what we want to then do is make sure that you've got your entry, your stop loss, and your take profit visible on the charts. This is available on MT4 and MT5. For me, I like to have that set up on there. So what you're going to do, again, bottom right-hand corner, click on the settings tab. You're then going to click on charts, and then it's going to bring this up here where it says trade levels. You want to make sure that is toggled on, because then that way then it gives you the visual understanding of where the trades are entered, the stop loss, and the take profit. Now we're going to go into the terminology. A lot of the times in trading, the terminology that is used is to abbreviate terms, and we use that in Telegram to make sure that we're not typing out everything, long that doesn't need to be done. So understanding the terminology is key in this. The most common terminology is SL, which is stop loss, TP, which is take profit, short, which means sell or down, long, which means buy or up, bearish means a downtrending market, bullish means an uptrending market, lots is the amount you will risk per pip. A pip is basically the percentage in point, which I'll explain in a minute. Layering is adding extra positions, and drawdown is a decline in funds. So all of these terminologies here are what we will use typically inside the gold trading community, and we'll go through them a little bit more in depth. So understanding lots and pip relations. Pips in this is simply the change in price on a currency pair, easily defined on MT4 and MT5 by the big numbers. So lots simply determine how much money you can gain or lose with every change in currency price that you trade. So if we look at this here, in different currency pairs, there's gold, Japanese yen, CHF, JPY, USD. They all have different pips. Luckily for us, we only trade gold, right? So all we're looking at on gold is the one after the decimal point. If this went from 1 to 2, 2 to 3, that would be 1 pips, 2 pips, 3 pips, and so on. But you'll get to understand this as we send out the trades. So if we look at here on gold, the focal point is the 1.1. So if you're in a buy for 10 pips, then you would add 10 to the 1.1 for your take profit, for example. If you're in a sell, you would subtract that off from the 1.1. So in these scenarios here, let's say our take profit is 40 pips and you were going for a buy or a sell, this is what it would look like. It would go from 1.1 to 5.1 because that is 40 pips. Remember, this is be 1, 2, 3, 4, 5, 6, 7, 8. And then as it changes over to 10, that'd become 2, that'd become 3, that'd become 4. So in this scenario here, we've gone up 40 pips. Hope that makes sense. And then if we're going to do it from 2431.1 and we're going to subtract the 40 because we're going down, it'd go to 2427. So we're going to go 40 pips the other way. So in this, all we're going to have to understand is the lot sizes and how the pips work. So again, if we're going to go if we wanted 20 pips up, it'd go from 1.1 to 3.1. If we were going to go the opposite way and take 10 pips off, it would go to 2430.1. Does that make sense? Hopefully, yes. Any questions, you can always comment below here, and I'll make sure I create more videos based on this. But if we talk lot sizes now, there's 3 different levels of lot sizes. There's the micro, the mini, and the standard. So a lot of people confuse 0.01 as just 1 pence or 9 pence. That's actually 10 pence to 90 pence. So it's 10 pence per pip, right? A mini is 0.1 to 0.99. So that'd be £1 to £9.90. And then you've got standard, which is 1.00. That's £10 and up. So you can see on the right-hand side there, if it was 5.00, it'd be £50. If it'd be 0.5, it'd be £5 per pip. It was 0.05, it'd be 50 pence per pip. So this is how we understand the game in this. The bigger the lot size, the bigger the reward, and also bigger the risk at the same time. So if we were to practice here, all I would recommend is if you're watching this, just print screen this or pause the video, go away, take some notes, and just write these down as to what you believe they would be. If this is your first ever time understanding trading, understanding the financial markets, print screen this, because there's nothing wrong with doing a little bit of homework on these and seeing if you got it right or wrong. But for those of you who did, here's the answers. 0.03 will be 30 pence, 12.5 will be £125, 0.78 will be £7.80, and so on and so on. So when we look at risk management, how to work out your risk per trade is account size divide by 100. Risk management is key in trading, because if you're over leveraging, you're gambling, you're trading too much, and you don't know your risk, you don't know the chance of ruin on your account. For me personally, I know that it'll take 35 to 38 trades to blow my account because I'm a little bit more risk averse. So if we look at an example on here, let's say you've got £1,950 in your account. If we were to get 1% of that, we'd simply divide it by 100. That would be £19.50. So to work out the lot size here, do the amount at risk, divide by the amount of pips in the stop loss. So let's just use easy maths. If we were doing £19.50, which is a 1%, let's say the stop loss was 20 pips, just for easy numbers, the total would be 0.97, right? So that's 97 pence risk at every single trade. We round that up or down, and it'd become 0.09 or 0.1 because that'd be 90 pence or £1. So from a risk management perspective, and as more of a rule of thumb, never risk more than 3% of your account per trade. If you risk more, make sure you're completely aware of that, what can be gained and what can be lost, and you can accept the outcome. Because what we do recommend here, and again, this isn't financial advice, but it's what I've seen work over time, is that for every £100 you have in your account, use 0.01. So if you're using a £500 account, it'd be 0.05, just as an example. That there is a good risk management way of doing it. Again, you can work out your own percentages and everything like that. But if you risk more, again, make sure you're completely aware of what it is. When it comes to pending orders, you've got buy stops, sell stops, buy limits, and sell limits. Every other trade that we do, I would say 99% of the time, is an instant execution, as you can see on the right-hand side here. Anything other than that would require what we call a pending order. So a buy stop is when we're expecting the price to go up and continue going. It takes your entry and it goes to take profit. A sell stop is when price is falling, it reaches your entry point, and then it goes to take profit. A sell limit is when you expect price to go up, hit your entry, and then come all the way down to a take profit zone. A buy limit is the inverse of that, where we're expecting price to come down, traders into the market, clicks your entry, and then it goes up to take profit. We very, very rarely use these as a community, but I'm just sharing these with you just so you have an understanding. But when it comes to entering trades properly, if it does not say buy limit, sell limit, buy stop, or sell stop, then it is an instant execution, market execution. This will say the same on MT4 and MT5. So what we're going to look at here is if it's market execution and a trade comes through, just as an example like this, we might say XAU USD buy, entry, stop loss, take profit. This bit here looks different on MT5 than it does MT4. I believe on MetaTrader 5, it had, and again, different on Androids as well, actually. On an Android, I should have said that at the beginning for MT4, for Android or Apple users. But again, if you're an Android user at this point, it will, instead of saying stop loss and take profit, it'll have a red underline and it'll have a blue underline or a green underline. I can't remember the exact color, but you would just simply put your stop loss into the stop loss section and your TP into the take profit section. If it's on Android, it'll be a little bit different. And then again, we're going to make sure that we've got XAU USD highlighted. We're going to make sure that it's a buy. We're going to make sure the entry is around where we said. The stop loss goes into stop loss, take profit goes into take profit. So in these scenarios here, stop loss, take profit, and we click buy market. So when it comes to withdrawing, don't become a professional depositor. We want to condition good behavior. It's almost like teaching a child or a pet or a new puppy. So when you make a good amount of profit, take that, treat yourself, treat your family, buy yourself something nice, or I don't know, treat yourself to something that you wouldn't necessarily normally buy. This way you train your brain not to over leverage, not to gamble, and to reward almost good behavior. But if we look at the compound growth side of things, a lot of people think short term, they think quick money, they think how quickly can I turn X into Y? If we look at this here, this was an initial balance deposit of 500. If we were just to do small, consistent growth in the space of a year, there'd be 4,923 in total. So like I always like to show this here, you can head over to thecalculatorsite.com, click on the daily compound interest. I'm not going to go into this too much because, again, people get excited by the big numbers. But I would recommend listen, read, study this book. It's called Trading in the Zone by Mark Douglas. This digs deep into why people lose and why people win in Forex trading. If you can understand this book and you understand the first 9 to 10 pages, it explains exactly why we lose in trading. I cover a lot of stuff based around mindset, psychology, overviews. I do that live on a week-by-week basis, so you guys can jump in, tune in, and you can kind of share the experiences at the same time, because this industry is very, very difficult when you look at the mindset and the psychology of it. Losing £2, £3, £4 is a different feeling when you're not in control. So this website here is where we can keep an eye on the daily news. As I'm not a trader, as I'm not someone who's sat in front of my computer all day, every day, and neither will you guys, this bit here isn't necessarily relevant for you to use. But this is where, just for an extra confirmation, the trader will look to see if there's any what we call red folder news. Red folder news is where you can see an exponentially move in that market. We only really trade XAU USD, which is gold. So we're looking for things in the US dollar market and things that could affect the overall movement in that market. So the other things to consider when trading is which trading session are you in? Are you in the London, the New York, or the Asia? We typically start our London session earlier on. We start usually 6, 7 a.m. UK time, and we trade all the way through into the evening, because what we find there's a lot of overlaps, a lot of new markets coming in, and the best time to look for opportunities typically between the London and New York session between 12 and 4 because of the volume. You've got London and New York, two very, very big countries that are moving markets day in, day out. So more volume is more opportunity to catch pips, which is more money in your bank account. But again, always remember that you're a student first in this. It's going to be a tough ride at the beginning. You may get frustrated, but trust the process. More importantly, you cannot go broke taking profits. So don't be that guy or girl who sits there and they're £7 up, but they're waiting to hit 10. They're £20 up, but they're waiting to hit 30. They're £90 up, but they're waiting to hit 100, and so on. If you can be disciplined in this space over profits, and you can follow the rule, follow the system that is designed in this way to help you guys make money, to learn how to grow in the financial markets, you will be in a very, very good position. So guys, that is a very basic understanding of the market, how it works, and some trading terminology in there for you. You're going to have questions as you go along. You're going to have things that crop up that you might not understand, that you might, have questions about. That's completely fine. If you do, make sure you drop it below this video or head over to Telegram on @GoldTradingSupport. Ask your questions in there. We have a full team there to help you every single step of the way. We have a few more videos for you to watch to help you understand layering, taking profits. You cannot go broke taking profits. I need to reiterate this to every single one of you. You cannot lose money by taking profits. Yes, the market might move 100 million pips. You might lose out on some trades sometimes. But if you stay disciplined, you stay focused, you remained true to the system that we've had in place now for God knows how long, you guys will eventually make money. Again, I always say this, past profits cannot guarantee future results. I'm just sharing this from a personal experience of people who've come through the system. Over 2,500 people have smashed it with us. Let's get you next.